It's about that time of day again, folks. Welcome back. Welcome back. Joseph James here from School of Trade. I got my buddy Marty Yerrico, my partner in crime, Marty Yerrico from Traders Audio here with me this morning. We're going from the screen to the trading floor this morning with your very unique and very powerful crude oil morning prep. Every morning at 7:30 a.m. Eastern Time, we start with the screens here in Los Angeles, and we move all the way across the continent to New York City for the NYMEX exchange, where I've got my colleague Marty Yerrico from Traders Audio with his feet on the ground, listening into what's happening on the street. Once again, my name is Joseph. Thanks for coming out and joining me here today. Come out and see me anytime, Monday through Friday, in our live trade room at 8 o'clock in the morning. We trade crude oil, gold, euro, and the mini Russell. Looking forward to having some technical analysis with you guys this morning. I'll be focused on a top-down approach, which means I'm going to start with a slower time frame and move all the way down to a faster time frame so that I can anticipate the direction at the open. Because if I can anticipate direction at the open, I can usually find those high percentage trading opportunities starting as early as 8 a.m. Eastern Time. So it's pretty simple, guys. My job is pretty simple. Start with the slower time frames first. That will find me direction. Then look to see what happened most recently, and that would be overnight, which is the London trading session. Once I figure out what happened overnight, once I see some support and resistance levels that happened overnight, then I'm going to try to anticipate the direction at the open. And with that direction, all I need to do is find some major support and resistance. Once I know direction and I know support and resistance, I'll be able to find those high percentage trading opportunities. Now, once I'm done with you, I'm going to toss you all the way across the country from Los Angeles all the way to New York City this morning. And I've got Marty Yerrico. I've got Marty Yerrico, our pit analyst. Don't forget to go out and see Marty every morning at 8:50 a.m. for his broadcast. Him and his partner Jeffrey on the NYMEX exchange do a fantastic job every morning. Marty's pit analysis today is going to give us some market direction, intermarket divergence, market internals, those all-important option prices, right? Talk about option prices. And, of course, very important, we'll talk about those often elusive but very important pit session trading levels. All right, those pit session trading levels this morning. All righty. Now you've heard from me. You've heard from me here. Let's not delay any further, and let's go grab some charts. The first thing we'll do is we'll look at some slower time frame charts here this morning. But I'm going to first start by directing your attention over to our blog. Head over to the blog at Sideways Markets. Give me just 1 second here. Head over to the blog at sidewaysmarkets.com, and you'll see, of course, a link there for your crude oil squawk and prep. So hit up that link, and that will take you over to our crude oil blog. And every morning, we've got all of the charts posted here. A little bit later on this morning, you'll see a copy of today's video recap, right? So make sure you guys check out this blog throughout the day. It's always being updated. As you can see, I've got all of the charts for crude oil posted there already today for you guys. And let's take a look at today's news. Today is Thursday of the 4th week of the month, not the last week of the month, but almost. You can see here we're starting to get towards the end of the month of July. I've got a double whammy this morning, a double whammy. We've got durable goods and jobless claims here at 8:30. Now, we call this Red Star News. We call this a Red Star News Day. And this ain't your average Red Star News Day. There are two Red Star events, both happening at the same time and both occurring the very first news slot of the morning. This is a very important clue. This tells us whenever we have a Red Star News Day, just like we did yesterday, and you saw what happened late in the day yesterday, right? Whenever we have a Red Star News Day, guys, we always know, look for some extra volume and volatility. I'll try to hold on to a runner on days with Red Star News, right? If I try to have that last final profit target, push it way out and let that trade run. We also know that days without any major news are always going to be a little bit less consistent. You'll see a little bit less consistency in the price action. So this morning, the first thing we notice is we've got two major news events right at 8:30. Now, Marty will talk about this a little bit later on this morning. For all you nat gas traders, we have inventory day, right? Today is Christmas for all you nat gas traders. This is the biggest day of the week if you're a nat gas trader. So at 10:30 this morning, we have some important news regarding inventories on nat gas. And if you're wondering, yes, it is just like the crude oil inventory report we see on Wednesdays at 10:30. So it's still the same type of scenario. It only affects natural gas. Then we have, of course, at 11 o'clock today, we have this Kansas City Fed Manufacturing Index. I want to highlight this. This is a very small, minor news event. You can see it's not a red star. It's not an orange star. It's a no star event, which tells us it's supposed to be a mild news report. But guys, I want to remind you that we have the Philly Fed, right? We've got the Empire State Fed, right? What else do we have? We have the Fairfax, right? We got the Kansas City. Okay, these are all of the Fed manufacturing surveys that occur around the country. Well, if you recall, manufacturing was on a rocket ship in New York State, on a rocket ship in Philadelphia, PA, right? It was moving lower, though, in Fairfax, Virginia. What was one we saw recently? Yeah, well, anyways, this is the Kansas City Fed today. So what are they doing in Kansas City? That's going to be a very big clue for crude oil futures. Now, why would crude oil be needed? Why? And again, natural gas too. Why would a manufacturing index be important for crude oil? Well, what do big factories need? They need heating and cooling, and they need transportation. Heating and cooling, I think nat gas. Transportation, shipping, right? Trucks, airplanes, I think crude oil futures. So even though this is supposed to be a mild news report, this Kansas City Fed manufacturing, right, is going to play right in. It was the Richmond, sorry, not Fairfax. I knew I had it wrong. Right, we saw Richmond Fed, that was lower than expected. This is going to have a cumulative effect on the bias of crude. Okay, so imagine now traders have been keeping track. The Empire State, the Philly Fed, the Richmond, the Kansas City. Now they're going to make educated decisions based on all these different, right, Fed manufacturing indexes. What's the bottom line this morning? We've got 2 red star news events to kick off the day today. I'll be ready for the action right at 8:35 this morning. Now, whenever we have these red star news events, remember that we will expect to see extra volume and extra volatility as traders enter and exit the market around this news event. It is in our best interest to wait 5, 10, possibly 15 minutes after this news event is released before we start to see the market calm down, get over the jitters, and then start to move in one consistent direction. So remember, it does not pay well to try to be the first person in the market after that news is released. All right, very few people are making money in those moves. Most of it is accumulation by big buyers and sellers. For all of us day traders out there, we're going to wait patiently after 8:30 to get our first trade of the morning. Moving now to some charts. Looking at the crude oil futures this morning. As I said, I'm going to provide a top-down approach, and this top-down approach starts with a 4-hour chart. Now, if you recall yesterday morning, right, if you guys are with us yesterday morning, we talked about this price wedge, and we talked about buying the lows of the wedge, which we did successfully. And then once we saw the collapse, we were able to sell short yesterday morning as well. Now here this morning, we can see a new symmetrical pattern has developed. We have support here at 104.08 down to 103.30. And you can see here we're getting a little hung up on this 104.12 to 104.63. Now this is a very big clue, and this just happened the last few minutes. In fact, I'll have to update the blog here this morning with some commentary because earlier this morning we had this candlestick was a big fat red candle. In fact, you can see the chart snapshot that we included on our blog this morning just 10 minutes ago. So we've seen a tremendous bounce, and we've got about 15 minutes left on this 4-hour candle, and it looks like we're going to close inside of this trigger zone. Now, for my members out there, this is my trigger zone number 2, right? Trigger zone number 2. Same thing above, trigger zone number 2. So here we are now, 105.12, 104.63. Guys, if this thing holds, we now have, and again, less than 15 minutes until this candle closes. If the candle closes inside of this range, I'm expecting price is going to go higher here. All right? If the candle closes inside of this range, we are probably going to see those buyers try to pull that price right back up. If this ends up holding as support, we will assume now this is going to be a sideways range, and it will start to wedge. So we will draw new trend lines, and we will assume this is going to be a new price wedge. But again, everything revolves around what happens from this area. If we rise higher, I'm buying pullbacks because this support has held. If the support happens to fail, if we close below 104.63, we will be selling short down to 104.08, and of course a runner target at 103.30. Now again, we've got that symmetry support, this buy zone below us. We will be looking to take a profit target off at 104.08. If we get the reversal, we're going to head back higher and we will begin to buy. So as we look at this 4-hour chart right now, we really have 3 scenarios that we can easily see. Scenario 1, we get stuck in this 104 to 63 to 104, right, to 105.12. Scenario number 2 is that we end up bouncing off of this zone and move higher. As we move higher, we'll be looking to buy pullbacks using our wave pattern long. If price closes below 104.63, we then know the bears are really in charge here this morning. We've got 13 minutes left in this candlestick to see if they're going to close below 104.63, and if they do, we will initiate short selling opportunities down to 104.08. At 104.08, we'll then look to see a price reversal. If we don't get it, we know the next target is 103.30. So this area right here looks to be one of the most important spots that we're going to get today. Now let's move forward to a 60-minute chart, because the 60-minute chart now is going to give me a lot more details. Looking at the 60-minute chart, we see a lot of the same stuff, but you'll notice we get a lot more information from this 60-minute chart. You'll notice the same symmetry buy zone below us, and you'll notice the same trigger zone here. Right? This looks like it's probably wrong here, 105.11. Sorry about that. A little typo there. So now looking at this trigger zone, again, we can see the same symmetrical pattern, we can see the same symmetry buy zone, and we can see the same trigger zone to hold the support. Very important here we see, as we look at these candlesticks, you'll notice the doji pattern at the lows. This price clearly tried to go lower and failed. This is a very bullish clue. We know this is the trigger zone number 2. Guys, don't be surprised if this price takes off to the upside here this morning, especially if we get a positive durable goods orders, a nice lower jobless claims report, a bullish dollar, right? This is going to cause crude to jump higher here this morning. So initially this morning, we're talking about selling. This recent last 15, 20 minutes of price action makes me think these buyers are going to give this thing a run for their money. They're going to try to push this thing higher. Now, the last chart we're going to get here, this is going to end up being most likely one of the most important charts we get. Now, right now is the very best selling opportunity we're going to get in the short term on crude. Right now. So right now, I am looking for selling opportunities here on crude. You can see the bear channel. You can see the red cloud cover. Now, this is a very simple entry chart. One of the things we try very hard to do in our live trade room is to keep things extremely simple. We will prep, and then once we know direction, we simplify it all down to a simple entry chart, and we take our entries. I can see 3 clues here. I can see the bear channel, right? Bearish channel. I can see the trend lower. And very important, I can see the price is below the red cloud cover. We want to get short here. I am looking to sell short here, guys, until something changes. What would that something be? 105.25. 105.25 is my official line in the sand. I will look for price to go above, and then I'll start looking to buy. Up until 105.25 or higher, this just becomes a test, and it can still head right back lower again. So we are bearish. We are bearish in sentiment. We are bearish in our bias right now. I can see 105.25. That's my line in the sand. And again, we know the bear channel tells us selling the highs is the highest percentage trade, and we just happen to have a double whammy here where we have the red cloud cover, and we are right below that red cloud right now, so we have perfect spot here to be a seller on crude oil futures. Now, I'm anxious to hear, though, what Marty's seeing, though, because, you know, we got two major news events. I'm anxious to see what he's seeing. Marty's got his feet on the ground on the NYMEX exchange right now. I'm seeing a bearish short-term trend, but I'm also seeing this potential to jump back higher. It's a little bit quiet ahead of these two Red Star news events in about 45 minutes from now. Marty, great to have you here with us this morning. Thanks for being here. Are you seeing what I'm seeing this morning? How are we doing today?
Hey, good morning, JJ. So, yeah, across the board, I mean, you can see the strength kind of associated with the market after yesterday's close. Again, we come into yesterday, and you can see that we were down into the 104 handle very briefly. We traded down to, I believe, 104.79 was the low, and in the pit session yesterday, and you can see the strength associated with the market, right? So we ended up coming back up into the 105 handle and actually closing and settling now above the 105. Oh, boy, it's not good. So overall, we have been and continue to be seeing just a little bit of strength now. So to me, I heard you say 105.25, and it made me jump a little bit because 104.25 is my number that I have that's written down on all my cards, literally written down all over the place here. And it's going to be a level that we really have to keep an eye on, 104.25. And if we break below that 104.25, I think we'll be toast here, and we'll start trading down towards the 102. If we could stay above right now, maintain a nice bid, we could trade higher. Again, I don't have any charts up right here. Let me get up these worksheets, though. I didn't have the worksheets mailed over. So overall, then we did see now a little bit of strength here in the RBOB. I got a little bit of strength in the heating oil. I got a little bit of strength here in overall in all of our other products. Again, let's get some last prints here up on the board. Alrighty, guys, so then your crude right now, it's down just a bit. Again, we're still holding the 104 handle now. If we get it down to 104.25, we're toast. So we're going to try to keep that 104.25 level. Right now, I got your RBOB and heating oil SEP contracts just kind of holding steady and firm at the moment as well. I got 299.17 on the RBOB, heating oil 302.54. Overall, we're kind of holding right now off of some major support levels, but if we happen to drop on the opening bell, I think paper will really start to sell it off, and then we really kind of won't be able to stand the ground. The spread, Brent WTI spread, look at that, good indication here. It starts to widen, $2.11 in backwardation by 30 cents. So overall, that's a very bearish factor on the Brent to WTI spread. Brent crude holding levels below 107. Volatility right now is still holding steady and firm. I think that's our only little factor that's holding us up right now. Again, that's like really our only factor that's holding us up. It's volatility holding steady and firm here. Okay, 1 second, guys. Sorry, I didn't realize you guys weren't looking at charts. How about that? I hope it's all right. Let's see. So again, we're kind of continuing on, and we're looking across the board at all our other products, but overall, we do have your RBOB, we have your heating oil, we have your crude oil slightly lower, but holding steady on support right now. We're going to be looking for volatility to firm it up, and if we get a little bit of a selling off the opening bell, I think paper will still have the upper hand here and really kind of start to take advantage of this market and sell it off just a bit. So we're going to have to really be mindful of this. Again, 104.25 is a very important level to keep my eyes on. We have natural gas inventory numbers today. I did have a little bit of a worksheet here for you guys, but unfortunately I can't show it to you. I will, it's on the other computer. I will send it over so it can be on the blog. It's just simply the consensus number today, and basically we're looking for 46 BCF on this number. If we happen to get above 46 BCF, you can be a seller. If we get below 46 BCF, so we get a reading of 43, 40, 39, that will be very bullish. So again, anything below 46 will be buying. Anything above 46 will be selling on that number at 10:30 on natural gas. Again, we try to typically wait for the true market reaction to that number to come in about 10:45. Again, we don't like to trade the initial reaction of the number right then and there at 10:30. We usually like to let the butterflies settle and trade around that 10:45 to 11 o'clock time frame. As we are kind of just holding firm here and steady. Again, that's really all I got for you. Watch the 104.25 level. Let's go over some levels here real quickly. Again, let's rock and roll through these levels here. As you can see, I got you guys for crude today, 25th. Pit session high from yesterday, 106. That's 106.95. Your pit session low from yesterday, 104.79, which we're actually trading at right now. Just pretty much, that's pretty cool. So sitting right at that pit session low. If we happen to hold on this This is the support that I'm saying that's holding right now. That's across the board on the RBOB, crude, heating oil, and Brent. I'm telling you, it's just across the board, and it's pretty amazing right now how we're holding all the lows. Closing settlement number yesterday, I got something else up there. It's going to be 105.44. Sorry, that's 105.44 is the closing settlement number. I don't know why it says 10,544, but it's 105.44. Continuing on now, we're going to take a quick look at the resistance above. I got 106.70. I got 107.87, 110.05, and then I got 110.23. Support down below, I got for you guys 104.79, 104.51, 104.25, very important level, 104.25, not written down there, but just remember it. 103.57, and I got 101.41. Overall in the pit, they show a little bit of a put buying again, but really, honestly, I think it's for those guys that are net long in the market. They buy some puts to just protect themselves because they are kind of just looking still rather long, but they do have protection on the downside, so they're not really too concerned about it. They don't really mind if it goes lower because they'll make money on their premiums, on their puts, and their downside calls anyway, and then they'll start to make money when it fades, and fades the move and it gets popped back up off the low. So overall, if you're long in this market, I would suggest to hedge a little bit and have some puts purchased or something. I mean, because overall this could trade back lower after last night's events. Alrighty, so again, we went over our support resistance, overall volatility, 24% still holding steady. If this vol starts to confirm lower and starts to trade maybe 22, 23%, then yes, we can fall. We'll fall below the 104.25 and we'll be done. Alrighty, guys, let's take a quick look at that natural gas. We do have an inventory today on natural gas, and that's going to be a pretty important one, ladies and gentlemen, again, as we are going to be watching from last week's number to this week's number. Again, we got that 64 BCF, and right now on natural gas, if I could just tell you guys, we're sitting in the middle of the wedge at the moment, so we're awaiting news, right? We're waiting the news to the breakout as we sit in the middle of the wedge. Alrighty, guys, I got your pit session high here for your natural gas, 379, 378 even, 378 even. Your low, 369, 368.90, sorry, 368.90, excuse me. Closing settlement number, 369.5. Daily pivot today, we have for you guys your daily pivot once again, 372.10. Resistance up above, 375.30, 363.40, and also 353.90. Support down below here, 366.30, 366 even, and I got 353.90. So overall, ladies and gentlemen, again, those are your levels here for your natural gas, for your crude. And really, we want to really kind of watch that volatility today. Watch natural gas inventory number, of course, is always the case. And we're pretty much sitting right in the middle of this wedge right now in the natural gas. So I would really kind of be patient to see if we test the outer extremes of this balance area. And if we do hit one of the outer extremes of this balance area, then I'm hoping and wishing that we get a good number to bring us back up toward the higher end. So overall, guys, that's about all I got for you here. Again, I'd like to thank you guys for joining us today. Again, I'm going to throw it back over to Los Angeles, and we'll speak to JJ.
Thanks a lot, Marty. As always, great to have you here with us today. Marty Yuriko, guys, from Traders Audio. Go out and see Marty every morning at 8:50 a.m. Him and his partner, Jeffrey, do a great job with that broadcast directly from the NYMEX exchange. And, of course, I'm JJ at School of Trade. Give me drop me an email. Let me know how you're doing. If you got any questions out there for me, I run a live trader each morning at 8 a.m. Eastern Time over at SchoolOfTrade.com. And, of course, want to thank each and every one of you. Thanks for coming out and joining us today. Thanks for being on the call. As always, we look forward to your feedback. We look forward to hearing from you. Do you want would you like to see us do anything differently here in these morning broadcasts? Let us know. Drop us an email. Put a comment on our blog. Whatever it takes, guys. We've got early morning news, 8:30 a.m. Eastern Time. I'm looking at this selling opportunity right now on crude oil futures. Hope you guys learned something new today. Now we're going to take that information and we're going to earn something today. Have a great day out there today. Have a great Thursday here, summertime Thursday. And we'll catch you guys here 23 hours and 30 minutes from now for a finally Friday edition of our crude oil morning prep. We'll see you tomorrow morning, guys. Have a wonderful trading day today and keep in touch. Adios, amigos. Bye-bye for now.